Hi, this is Jerry. Today I want to share the most expensive lesson of my life, why we should stop trying to outsmart Warren Buffett. In the world of investing, arrogance is often far more dangerous than ignorance, and for many years I carried both without even realizing it. Like many young professionals who step into finance with strong academic backgrounds and even stronger egos, I believed I understood the market better than I did. After college, I joined one of the most famous global investment banks, a badge of honor I wore with pride. The prestige, the bonuses, the fast-paced environment, the pressure, all of it inflated my confidence. I was convinced that I had already figured out the investing world. At that time, I even looked down on Warren Buffett. To me, he was just an old man with outdated ideas, stuck in slow-moving traditional industries. I used to think, why should I follow an 80-year-old guy's advice in a market driven by technology, innovation, and speed? In my mind, Buffett represented a past generation, not the future. Life, however, has a very sharp way of reminding us just how wrong we can be. One day, I attended a 20-minute pitch session hosted by a financial platform claiming to help individuals grow their wealth. The presenters spoke with confidence, backed by flashy charts and perfectly rehearsed statements. They promised over 30% annual returns, guaranteed for every investor. Based on my basic analysis, their business model was workable. At that time, I didn't question it much. I was young, overly confident, and overly optimistic. The arrogance from working at a top investment bank made me think that I could see things others could not. I convinced myself that this platform was an opportunity others were too conservative to take. So without hesitation, I invested $500,000 earned through years of hard work. Looking back, I realize how irrational that decision was. But arrogance blinds you. When you assume you're smarter than the market, you stop questioning, stop analyzing, and stop being careful. Worst of all, you stop being humble. 6 months later, the platform collapsed. It was exposed as a financial fraud, and regulators forced it into liquidation. My entire investment, every dollar of the $500,000, disappeared overnight. The moment I learned the truth, I could barely breathe. It wasn't just about losing money. This was not a small mistake. It was the most expensive mistake of my life. After the shock, sadness, and frustration faded, I began to reflect deeply. For the first time, I understood Warren Buffett's famous line, "Never invest in a business you do not understand." This sentence hit me harder than the loss itself. I had ignored the oldest rule of investing because I believed I was smarter than everyone else, including Buffett himself. Yet Buffett's entire career was built on discipline, patience, and deep understanding, not excitement or greed. And here I was, doing the exact opposite. So, I made a decision. I printed Buffett's quote and taped it on my door, forcing myself to read it every morning before leaving for work. It became a personal reminder of humility, discipline, and rationality, the three pillars I'd overlooked. From then on, I changed my entire approach to investing. I shifted from chasing hot opportunities to carefully studying industries, evaluating business models, and interviewing experts who had decades of experience in their fields. I started reading annual reports, understanding supply chain risks, and learning how policies influence long-term prospects. Slowly, I rebuilt myself as an investor, not based on ego, but on knowledge and humility. A few years later, a new wave of excitement swept across the world. Cryptocurrency. The hype was undeniable. My friends, colleagues, and even strangers were talking about Bitcoin, Ethereum, and every kind of token imaginable. People who had never opened a financial statement were suddenly calling themselves crypto experts. Many claimed that traditional investment principles were no longer relevant. Once again, people believed they could outsmart Buffett. And once again, I saw myself in them, the younger, reckless version of me. But this time, I didn't jump in blindly. I spent months researching blockchain technology, token economics, mining, regulatory risks, and market manipulation. I analyzed what institutions were doing, how governments were reacting, and how much transparency existed behind each cryptocurrency project. My conclusion was simple. Crypto may have potential, but it was far too early and far too unpredictable for an ordinary individual investor. There were no earnings reports, no audited financials, and no clear regulations. Prices moved based on emotions, rumors, and policies that changed overnight. Most importantly, the average investor had no real understanding of what they were buying. So I chose to stay out. Meanwhile, many of my friends jumped in enthusiastically. Some borrowed money to invest. Some put their entire savings into tokens they couldn't explain. They were convinced they had found the next gold rush. A year later, I watched many of them lose everything when the market crashed. The dreams disappeared. The excitement vanished. And the lessons remained painfully. The most important lesson of my investing life. Looking back at both experiences, the financial fraud and the crypto craze, I can clearly see one pattern. Most people lose money not because they lack intelligence, but because they lack discipline. We all want to believe we are the exception. We want to believe we can beat the market. We want to believe we can outsmart people like Warren Buffett. But the truth is simple. 99% of people will never be smarter than Warren Buffett. Buffett's philosophy is not about brilliance. It is about consistency. It is not about predicting the future. It is about understanding the present. It is not about chasing opportunities. It is about rejecting the wrong ones. His secret is humility, something I took far too long to learn. I share this experience not to highlight my failure, but to highlight a truth many investors learn only after losing money. Your mindset is your greatest asset or your greatest liability. Arrogance cost me $500,000. Humility helped me avoid losing even more. And discipline has been the foundation of every successful investment I've made since then. Today, when people ask me about the best investment advice I've ever received, I give them the same answer every time. Never invest in something you don't understand, no matter how exciting it looks. If an opportunity promises unbelievable returns, walk away. If your friends are rushing in without research, walk away. If you cannot explain the business in one sentence, walk away. Because sometimes the smartest investment decision you can make is to do nothing. And that, more than anything, is the wisdom Warren Buffett has taught me.